Waterfront with one eye-watering price, $2 million for this Kirribilli unit.
To get a hold of something like this would be not your typical two-bedroom apartment purchase.
But apartment prices in the suburb have dropped in 12 months, down 17%, falling in Vaucluse, Centennial Park, McMahon's Point, Earlwood, Darling Point, Beecroft and Milson's Point.
Areas like Kirribilli and Vaucluse unit markets are really interesting. They've been correcting ever since interest rates have been rising.
Sydney investors are dumping properties at unprecedented rates. Over 12,000 investment listings flooded the market in Q1 2026. That's a 28% year-on-year surge according to CoreLogic trends. And here's why they're selling. Mortgage stress hit record levels. Roy Morgan data shows 1.42 million Australian households at risk. Sydney homeowners now spending 57.6% of income on mortgage repayments, double the GFC levels of 2008. Domain confirms mortgage repayments consume 72% of average two-person household income for median-priced Sydney house. The Reserve Bank classifies anything above 30% as severe stress. Sydney's at 72%. Auction clearance rates crashed to 55.9%, lowest in years, and 938 Australian suburbs lost value, with 219 recording double-digit drops. Waverley Apartments down 36.5%. That's a $506,000 wipeout. Premier Chris Minns watching his housing market collapse. Western Sydney faces 36% supply shortfall. Builders walking away and investors fleeing before it gets worse. Minns watches investor exodus accelerate. CoreLogic and PropTrack data reveals investor distress selling surged Q1 2026. Over 12,000 investment properties listed Sydney Metro, 28% increase year on year. Not gradual market adjustment, panic selling. Investors underwater on mortgages, can't afford repayments, forced to liquidate. Roy Morgan research confirms mortgage crisis nationwide. 1.42 million households classified at risk of mortgage stress. That's households spending more than 30% after-tax income on mortgage repayments, many spending far more. Sydney particularly devastated. Domain data shows typical Sydney house buyer with 20% deposit spending, 72% of two-person household income on mortgage repayments, up from 47.8% in 2019. Reserve Bank threshold for severe stress is 30%. Sydney at 72%. That's 2.4 times the stress threshold. Completely unsustainable. Compared to other capitals, Adelaide, 51.5%, Melbourne, 50.9%, Brisbane, 49.5%, Perth, 39.5%, Canberra, 28.6%, Sydney worst by massive margin. Adelaide second worst at 51.5%, still 20 percentage points below Sydney's 72%. Why so high? Sydney median house price hit $1.5 million. Mortgage on that with 20% deposit equals $1.2 million borrowed. Current variable rates 6.2 to 6.7%. Monthly repayment roughly $8,000. Median two-person household income Sydney approximately $134,000 annually. After tax roughly $100,000. That's $8,333 monthly. Mortgage repayment, $8,000. Leaves $333 monthly for everything else. Food, transport, utilities, insurance, rates, council fees, car, phone, internet, clothing, medical, entertainment. Impossible. Result? Investors selling. Can't afford to hold. Negative cash flow bleeding them monthly. Rents don't cover mortgages. Not even close. Average Sydney rent $650 weekly equals $2,817 monthly. Mortgage costs $8,000 monthly. Shortfall $5,183. Investors subsidizing tenants $5,183 monthly. $62,196 annually. For what? Property values falling. Capital losses mounting. Why hold asset that costs $62,000 yearly and loses value? Answer: they're not holding, they're selling. 12,000 investment listings. Q1 2026. Flooding market, creating supply glut. Auction clearance rates collapsed 55.9%, means 44.1% of auctions failing. Properties passed in, vendors desperate, buyers scarce. The investor who lost $280,000. Marcus is 52, IT professional, earns $145,000 annually, and bought investment property, Waverley, in 2021 for $1.4 million. 2-bedroom apartment, eastern suburbs, close to beach, blue chip suburb, safe investment. Put down $280,000 deposit, borrowed $1.12 million at 2.3% fixed 3 years. Monthly repayments, $4,200. Rent received $650 weekly equals $2,817 monthly. Negative gearing, $1,383 monthly. Marcus comfortable. Tax deductions. Capital growth expected. Holding long-term for retirement. 2024 arrived. Fixed rate expired. Variable rate 6.5%. Repayments jumped to $7,300 monthly. Negative gearing exploded to $4,483 monthly. That's $53,796 annually. Marcus couldn't sustain. Looked at refinancing. Every bank offered similar rates. No escape. Marcus decided to sell. Listed March 2025 for $1.35 million. Slight loss, acceptable. Market slow, no offers. Reduced to $1.25 million. Few inspections. Mostly renters. No buyers. August 2025. Reduced to $1.15 million. Below purchase price. Desperate. December 2025. Sold for $934,500. Down 36.5% from $1.4 million purchase. That's $465,500 capital loss. Minus $280,000 deposit. Minus 3 years negative gearing. Roughly $50,000. Years 2022 to 2024 before rates exploded. Total loss. Approximately $280,000. Plus agent fees, plus selling costs. Real loss. Closer to $300,000. Marcus's retirement nest egg destroyed. 5 years work, decade of saving, gone. And he's not alone. 938 Australian suburbs, recorded price falls. 219, with double-digit declines. Waverley apartments down 36.5%. Investors across Sydney experiencing similar losses. That's why 12,000 listings hit market Q1 2026. Mass capitulation. 5 reasons investors are fleeing. Reason 1. Mortgage stress at double GFC levels. Current mortgage to income ratio, 57.6%. Sydney. 2008. GFC peak was 28%. Current stress double worst crisis in living memory. Investors can't sustain repayments. Forced to sell. Reason 2. Negative gearing, unsustainable. Rents don't cover mortgages. Average Sydney rent $2,817 monthly. Average mortgage $8,000 monthly. Investors subsidizing $5,183 monthly. $62,196 annually. Most can't afford. Sell to stop bleeding. Reason 3. Capital values falling. 938 suburbs recorded losses. 219 double-digit declines. Investors watching equity evaporate. No point holding asset that costs money and loses value. Exit before losses worsen. Reason 4. Auction clearance rates collapsing. 55.9%. Clearance means market stalling. Buyers scarce. Supply exceeding demand. Investors see writing on wall. Sell now before it gets worse. Rush for exits creates more supply. Accelerates decline. Vicious cycle. Reason 5. Western Sydney supply shortfall. 36%. Builders walking away. New construction collapsing. Should support prices through scarcity. Instead, affordability crisis overrides supply constraints. Nobody can buy even when supply limited. Because prices too high relative to incomes, investors realize fundamentals broken. Market can't sustain current valuations. Exit while can still find buyers. What Mins can't fix and what he can. Mins can't reduce mortgage rates. RBA sets policy independently. Cash rate 3.85%, February 2026. Variable mortgage rate 6.2 to 6.7%. Rate hike likely March. Would push to 4.1% cash rate. Variable mortgages 6.5 to 7%. Makes crisis worse. Mins powerless. Mins can't increase household incomes overnight. Wage growth 3 to 4% annually. Housing costs growing 10 to 15%. Gap widening. Would take decade of 8% wage growth to catch housing costs. Not happening. Mins can't fix. What Mins can do: abolish stamp duty, NSW stamp duty, on $1.5 million property, roughly $64,000. Massive upfront cost. Blocks transactions. Switches buyers to annual land tax would improve liquidity. More transactions. Better price discovery. Helps market function. Fast-track planning approvals. Western Sydney 36% supply shortfall. Approvals taking 18 to 24 months. Cut to 6 months. Remove delays. Let builders build. Increase supply. Moderate prices. Zone more land residential. Sydney constrained by geography. Water east, mountains west. Limited developable land. Release more. Rezone industrial to residential. Mixed-use developments. Increase density. More supply. Build social housing massively. Take pressure off private market. 20,000 units annually. Provides affordable options. Reduces demand for private rentals and purchases. Stabilizes prices. Provide negative gearing relief. Temporary subsidy for investors in stress. Cover portion of negative gearing losses. Keep properties on market. Prevents mass liquidation. Stabilizes supply. Controversial, but necessary emergency measure. But Min's doing none of this. Announcing housing targets, activity centers, density bonuses, doesn't address core problem. Prices too high relative to incomes. Until that corrects, crisis continues. Where this collapse ends, best case, prices fall 15 to 20% over next 18 months. Brings median Sydney house to $1.2 million. Still expensive, but more sustainable. Mortgage repayments drop to 55 to 60% of household income. Still high, but survivable. Investor exodus slows. Market stabilizes. Some buy back in at lower prices. Worst case, prices fall 30 to 40%. Median drops to $900,000 to $1.05 million. Massive wealth destruction. Negative equity widespread. Banks tighten lending. Market freezes. Nobody buying. Investors can't sell. Forced to hold bleeding assets. Some default. Bank foreclosures. Social crisis. Political emergency. Realistic scenario: prices fall 20 to 25% over 2 years. Median Sydney house, $1.125 to $1.2 million. Auction clearances stay below 60%. Investor exodus continues. Maybe 25,000 to 30,000 distressed sales 2026 to 2027. Supply glut persists. First home buyers enter cautiously. Downsizers opportunistic. But overall, demand weak. Market takes 3 to 5 years to stabilize. Marcus sold at $934,500. Lost $280,000. Now renting. Age 52. Too old to recover financially. Retirement plans destroyed. Working until 70. Maybe longer. While property he sold sits on market. New owner trying to rent it. Can't find tenants at price needed to cover mortgage. Sydney's rental and sales markets both broken. Nobody winning except those who never bought. The panic Mins won't admit. Over 12,000 investment properties listed Sydney Q1 2026, up 28% year on year. Roy Morgan shows 1.42 million households at risk nationwide. Sydney homeowners spending 57.6% income on mortgages, GFC levels. Domain confirms 72% for median house buyer. Reserve Bank stress threshold is 30%. Auction clearance crashed, 55.9%. 938 suburbs recorded losses, 219 double-digit drops. Waverley Apartments down 36.5%, $506,000 average loss. Marcus bought for $1.4 million in 2021, sold for $934,500 in 2025, lost $280,000 plus costs. Western Sydney faces 36% supply shortfall, builders walking away, yet prices falling. Because affordability crisis overrides supply constraints. Nobody can buy when mortgages consume 72% of income. This is how Premier Chris Minns' housing market became investor exodus. When 12,000 properties flood market in single quarter, that's panic selling. When mortgage stress double GFC levels, system breaking. When 72% of income goes to housing and Reserve Bank threshold is 30%, math impossible. And when 938 suburbs lose value and investors lose $280,000, market in freefall. More investors will sell, more prices will fall, more buyers will walk away. Hit subscribe to see how low Sydney goes.